Welcome back, folks. So let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Steve, I'm very good. Thanks for taking the call. I wanted to ask if you could assist me with mental exercise, asking questions about the S&P futures, please.
Okay, fire away.
Yeah, specifically, and the reason I asked that, Steve, I'll preface it by saying this. I saw a recognizable pattern that first showed up in the Russell 2000 Cash Index, indicating a completion of a rally phase into that August 29th high and potential top. Now, we certainly have made a short-term high, and we've given really nothing back on sideways. And so the jury is out as to whether on the Russell 2000 that August 29th high at 1742 is an important top. So time will have to tell us on that. But I'm calling to ask about the S&P because a very similar pattern, actually the same Elliott wave post-triangle thrust pattern tool that I've used for years, doesn't show up often, but I found it to be helpful and can be fairly precise. That seems to have shown up potentially for the S&P 500 from that May 2nd bottom into the high on September 21st, last Friday. And of course, we've pulled back very mildly. And here I ask this question based upon what I told you in preface. Mm-hmm. We've come down and we've tested apogee, 2916 or so. And I was just seeing you post that in Tiger TV, mm-hmm. And that price level also happens to be the swing high from the 19th and a couple days prior to that. So when I look at technical tools, 2916 shows up as just a real obvious spot. So my question is, if we go down and undercut that now with volume as displayed, say, on the 30-minute chart, how low would you suspect that selling wave would carry before you found first support?
Sure. So great question out here. And so if we take a look at what the ES Mini has done here, a couple days ago, price was creating that Rhodes momentum indicator top. That's a black diagonal line, kind of lower left to upper right. And also on that same trading day, I believe was Friday, it was the trading day of September 21st, it was a Tommy DeMarca set up 9 count out there. And oftentimes at the 9 count, we see some type of a change in trend out here. Yesterday, we saw the ES Mini, or really Sunday night, we saw the ES Mini gap down, and it never ever closed that gap. So that became the bearish reversal candle of the Rhodes momentum indicator, as well as it closed below my oscillator unchanged line, that green line. And we can see that so far today, that green line is held, 29.29. So all of that, even though you're using a different system and you're looking at a daily time frame chart where you're looking at a Elliott wave pattern out here, I also have a topping signal inside the ES. So just so that we're clear on that and taking a look at a daily time frame chart. Now, to answer your question, when you're below these levels of support, one level of support would be Stevie's green line. That now becomes resistance, 29, 29, 78 to be exact. So we'll have to call it 75 out here. Where's the next level of support? Well, inside of the Ninja Trader system and the E-Signal system, even though they're using the same math, John, sometimes they produce different market profiles. So what I can do is give you the range, and the range would be the top of the box. The top of the box range is going to be 28.96. That's the mathematical calculation for the TAS market profiles on the ES Mini, to my E-Signal, which comes at 29.14. So to answer your question, to be exact, it has to be a range right now, 28.96 to 29.14. Any close below that then brings the center of the box or the bottom of the box into being. What I would do is if price were to close below that, I just come down to that Tommy DeMarca setup trend line, which is the low from September 11th. And I would say that September 11th low would be a real key level of support. It's very close to the bottom of the TAS market profile on the Ninja Trader system. So it's in that 28.70 type area. Now, all that being said, It's always so important. I believe it is so important, especially when you and I, which we do track the Chapman wave counts out here. So I have that in the ES Mini, we're only in wave number 2, that this thing recycled because we had that 7th wave at that August 29th top. And so if we go with that fundamentally, we know that there's at least 2 more waves coming before any kind of significant top might be in place. Now, I don't know Basil's thoughts on that, but and I'm not using the full Chapman wave to do that. If I look at the weekly time frame chart out here, one of the things we're going to see is that Stevie's green line for several weeks, several months that is, has acted as very strong support. So that gives us a figure there, John, of 2906. Any pullback is nothing more than just coming back and testing that level. And it always helps to go take a look at the monthly time frame as well, just to keep things in perspective out here. And that gives you a support area of about 2832, give or take, right around 2832, 2835. Those are the levels of support that I have at this stage. Does that help answer your question?
Yeah, excellent. Thank you very much. It does, and
so the Russell 2000, let's talk about the Russell 2000, because it had that pattern. Because whenever we get a pattern, this is what I've learned. Whenever we get a topping or a bottoming pattern, then the very next thing, and you already asked that question, so I'm just really this is just you and I talking, just to kind of share it with our audience. The most important question to then ask when you have a topping pattern is, hey, where's support? And in essence, that was your question. Well, if we take a look at the Russell 2000 equity futures contract, and we see the top that it formed, you just simply using your pattern, but on the cash indice out here, and we were to say, hey, where is an ultimate support level on this? What you and I would do is we would look to the top of the weekly profile, and those are the green horizontal lines on my chart right now, and 1706 is the number. We would have said between 1692 and 1706, and the reason why we would have certainly said 1706 was because that weekly box is bearish in structure, and once price closed above that, the week of August 21st out there, there's nothing more bullish than a failed bearish pattern. Well, old resistance should become new support. And we take a look at the Russell 2000, we can see the lows from September 12th were a test and then rejection of that level. The same holds true for September 17th. The same holds true for September. Oh, this is a daily. Okay, so daily chart. Look at a daily time frame chart, but I've got the weekly numbers up here as well as a daily. But we can see September 18th, September 19th. We can see yesterday was a test and rejection of that level. So you're using the Russell 2000 maybe as a gauge. I would have to say if you see the close below 1706, but most specifically 1692, that's giving you your confirmation of what you want, that if the markets are moving in tandem, that price is headed lower. But right now, what we know is support is held inside the weakest of the 4 equity futures contracts, at least I guess what I would call the weakest of the 4 equity futures contracts from a pricing standpoint.
Look at that. That chart you display on the Russell Integra TV is just about as obvious as something can get. That support mark. Yeah, terrific. Yeah. Steve-O, you did answer my question. Help me with that exercise, so I appreciate that. We'll
thanks so much for calling, John.
If we go comatose until 2 p.m. on Wednesday in the FOMC. So
sounds great.
Enjoy
Thanks
that
for
time
calling.
off.
All righty, take care. We'll be right back, folks.
Bye.